Okay, the market's absolutely flat on the Nifty. There's about a 3.5-4 point change. 10,786 is where we are at. VIP Industries reported numbers not long back. This is, of course, for the third quarter. We are already a month and a half into the fourth quarter. Dilip Parimal is chairman of VIP Industries and is joining us to talk about the third quarter and, of course, how things are looking so far in the fourth quarter. Mr. Parimal, thanks very much for joining us. So margins were a bit under pressure. I mean, if you could begin there, what was the reason for the weakness? And also, how are things so far in the fourth quarter?
Well, there were a number of reasons for the margins, and I had indicated that for the last 3 months, that the major reason was that the rupee has depreciated in the last quarter by about 12% over that in the previous year. And also there was an increase of 5% in the import duty on luggage. And we import about 60% of our products which we sell. So that had a very high inflationary impact on our products. And that was the main reason for the margin contraction. And also, otherwise, the sales volume growth was very good, and the same trend is continuing this quarter. Hopefully, things should be better from the next quarter. We are all taking price increases now, so things should be better next quarter.
Okay, Mr. Parimal, can you just expand a little bit on the price increases? How much have you already taken this quarter? How much do you intend to take? And how much will it probably negate in terms of the pressures that you're facing on your margins?
There's not much to expand because so far we haven't taken much of a price increase and we are still working out the details. So right now I cannot say too much, but we should have some improvement in the margins.
Okay. What would be maybe the extent of the price hike? Would it be, say, a sub 10% price hike? Can you go beyond 10%?
No, not at all, not at all. I mean, in today's day, the price increase, even a 5% price increase is quite high.
Okay.
And the market is quite competitive, though the sales are increasing, but it's not nowhere as bad as the airline industry where their growth is very high, but they all made losses in the last quarters. But I think since we're directly connected with the airline industry, I'm saying that. But otherwise, I think at the most we'll take a 5% price increase.
So just about to
The good point is that our volumes are increasing very much.
Yes. Okay, fair enough. Just about to, the price increase, just about to take care of any cost increase, but not more because the competitive intensity is pretty high. Could you talk about growth across segments?
Yes.
What kind of products are doing very well? And also, I mean, away from luggage, what else is working for you?
Well, we are mainly in luggage. I mean, we have a small handbags portfolio, but that is less than it's less than 10% of our sales. So it's mainly luggage that we are in. And luggage sales are very good. Sales are really growing at a very fast clip. And we had about 28% growth last quarter, and our volume growth is slightly higher because the sales is skewing towards the smaller items. And the market is otherwise overall very good. All our brands are doing well in all the segments. So in fact, it's from the sales point of view, it's a very good position to be in because sales are good. And I think we are gaining market share from the unorganized sector, especially in the smaller items. And GST has been a very good, has been a boon for us. And I think that is why
go ahead.
Because the market is growing, there is intense competition. Everyone has entered into the fray in a very strong way.
Okay.
Which is a good thing. It's a good thing for the industry.
Yes, absolutely. That point is taken about competitive intensity. But Mr. Parimal, what is your market share in these smaller products? And when you talk about smaller products, what are you referring to? And what has been the incremental increase that you've probably seen from the last quarter? Or maybe, a relevant period of time?
Well, I don't have those details because we have so many ranges and all that it's becomes very difficult for me to give collectively a figure. But the smaller products mean basically the backpacks. You see, what has happened is that the backpacks are used for everything. Today, they have become very multi-purpose, including the school bags market. Let's say 5 years ago, I don't think our industry had any share of the school bags market. But in the last 5 years, maybe 7 years, these backpacks, what used to be called haversacks earlier, and they've also become in use for the school bag segment, which is quite a large segment and which was entirely in the unorganized sector. So I feel we have got a very good market share of that. And our market share in the Skybags brand is extremely high. It should be over in this backpack, should be in the organized sector, should be at least 60%. And our backpacks are dominated by our Skybags brand. And there is a very small presence in the VIP and Aristocrat and Carlton brand also. And Aristocrat brand also, which is the economy brand, has a good market share in backpacks.
Okay. All right, Mr. Parimal, we're going to leave it on that note. Thank you very much for joining in and speaking with us, taking the time and talking to us today. So that is VIP. That stock is down around 0.6%. The management saying that the maximum that they can do in terms of price hikes is limited to probably 5% odd, but they have seen their volumes increase. Remember, revenue was up 28% in the quarter gone by. Well, Krish Subramaniam of Altamount Capital is here with us to discuss his F&O strategies. Krish, over to you. What do you recommend last day of the trading week?
Yeah, good afternoon, Ekta. I think we are seeing a decent pullback, but closer to levels of 10,820, 830. I think we might just pause and keeping that in mind and the fact that we are already trading at around 10,800. I'm giving a bear spread wherein one could buy a 10,800 strike put and sell a 10,600 strike put. So the net cost comes to about 60. So the maximum gain one would make is 140 and recommend a stop loss of 30. And script specific, we are seeing a lot of action. To begin with, the OMCs I think are doing pretty well. And I'm recommending HPCLs. One could buy the futures for a possible target of 237. And keep a stop loss of 220, 215, 220 seems to be a historically very strong support level. So going into expiry, we may see the upside continuing. And the last one is buying on Tata Steel. The metals have been in great shape this week and they have actually led the rally from the forefront and have recovered quite a lot from the lows that they touched early this week. So I think one could buy Tata Steel for a possible target of 509, but also suggest to keep a stop loss of 490.
Okay, thanks very much. Appreciate you joining in, Krish. So that's the F&O trading ideas. The market, by the way, is down about 16 points now. So 10,773 is where we're at. So nothing happening at an index level, but mid-cap, small-cap buoyancy continues. And the latest to join action is the oil marketing companies, which are bouncing a little bit. It's a wrap here on this edition of Trading Hour. Halftime report comes right up.